Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over everything you need to know on AMC stock and what the current situation looks like, give you a rundown of the data and my opinion on where we're at here. So AMC stock, yeah, obviously did not have a great earnings. I think we're kind of in a weird moment in time, specifically for AMC and even the broader markets for that matter. But AMC, just looking at that picture first, AMC beat revenue, beat on EPS. They had good earnings. They didn't really forecast anything bad. I mean, we didn't get any like formal guidance numbers. The estimates are that things get better from here, or that next quarter is potentially going to start a better box office streak for AMC. So you do have fundamental, I guess, tailwinds for the company. And even if you look at, analyst price targets, the average analyst price target is higher than where we are today, right? The average analyst price target is, let's see what Ortex says following AMC earnings, $5.22. That would be about 20% higher from here. But you have a lot of price targets that are, higher than that. $8, $10, I think $12 is still the highest price target on AMC. So you do have fundamental things that are working for AMC right now, right? That are maybe getting better from here. But it sounded a lot like dilution on the earnings call. The way that Adam Aaron was stressing the need to raise cash and to keep a lot of cash on the balance sheet, cash on hand. It sounds like we could get dilution soon. I think the market's kind of in a weird spot with AMC for that fact. We just don't know when we're going to get dilution next, and it sounds like we could get dilution soon. Now, we're also in a pretty weird situation for the markets. We do have some big catalysts coming this week, like the non-farm payroll report on Wednesday. We're going to get the ADP employment change on non-farm is on Friday. We have ADP on Wednesday. We have Fed Jerome Powell that does a testimony in front of the Senate on Wednesday and Thursday, and a couple other data points as well. Not on Monday. Nothing's going to be happening tomorrow, but on Tuesday. So we've rallied a lot, and there's been very little give back at all. There's basically no price discovery right now, and it's kind of crazy. If you guys been in the markets a while, I assume a lot of you guys probably got into the markets 2020, 2021 with the whole movement, AMC, GME or whatnot. Maybe you got in before, but I mean, this is the lowest level of volatility you have seen in a long time. I mean, it's even kind of crazy to look at this on a weekly candlestick chart. This is the S&P 500. And back during 2020 and 2021, when there was massive stimulus, literally stimulus checks going out to people, when there was quantitative easing, the Fed was literally keeping rates ultra low, buying bonds. There was more volatility and price discovery in markets, than we have now, which is crazy, right? Given there's still a lot of uncertainty on what's going to happen. Like, look at this period of time, these weeks. There was red candles in here, right? There was green candles. There was red candles. Look at now. There in the last 18 weeks, there's only been 2 red weeks. And the red week that we had was the first week of 2024. You were down 1.5%. And 3 weeks ago, you were down 1/3 of 1%. Every other week has been higher. Here you are up 5.85%, 1.36%, 2.3%, 1%, almost 1%. 0.2%, 2.5%, 1%. Like, you are literally soaring, and there is zero price discovery. Price discovery is important for a market. So I think you're kind of getting a little toppy here. You're getting a little exuberant. The greed is definitely out there in the markets. And I think that just means if we get bad news, we're not priced for that at all. And, maybe Jerome Powell gives us new information. Maybe the non-farm payroll report is really bad or really good. Who knows? Who knows what the thing is going to be? But at some point, there will be a sharp reset in our markets. And after this little volatility that we've seen, it wouldn't surprise me if you could have a really big down day. I mean, this is pretty historical. It's been a long time since we have seen a 2% decline on the S&P 500, like a very long time. Let's pull this up. This is a chart of the S&P 500 streaks without a 2% decline from a closing high, 1953 through 2024. I mean, you're getting up there with historical, instances in the past. What was this? 57, 61, 64. And then in recent times, this has only happened in 1995, 2007, 2018, and now. And I mean, these times in recent history, 07, I mean, that was basically the top of that cycle. 2018, that was right before you went through that Christmas time crash, the China trade war and all of that. That was a 20% downturn in just a couple of weeks. That was a pretty aggressive crash. I don't know how many of you guys were actually in the markets during that time, but if you lived through that was quite a crash at the time. And now you're back up there as well with just, historically very bullish markets. So I do think it's safe to say we can expect some kind of correction here soon. I think some people believe a full-on crash is coming, and in my personal opinion, you only get a full-on crash. A crash, in my opinion, is 15-20%. Then you start to really get into crash territory. 15% lower from here would put the S&P back to 433. That would be a huge drop. 20% down would be something just kind of crazy, right? To even imagine at this point. That would put the S&P back to your November 2023 lows. So that would be giving up everything. And I think for that to really happen, you would have to get the AI trade falling apart, which NVIDIA just reported earnings. I think you would have to see real fears about a recession come about, maybe even some stagflation fears coming out. And, if that were to happen, I guess the scariest part is you could fall even lower than that. So, if you were to fall all the way back to your 2022 lows, that would be, 33% decline. Yeah, and if you were to enter some kind of deep recession, you could at least see a 20% pullback. But it's really the fears of a recession that can drag down the markets. And I don't forecast that happening, at least in the immediate future. But as I've talked about here on the channel 2 times now, March 12th is going to be a huge day for the ARM lockup period. Any which way you put it, ARM is likely to fall pretty big on March 12th or over the next coming weeks after that. And that could put some pressure on your AI trade, which could lead to a correction in the markets if people start to realize maybe these quote unquote AI stocks are little on the pricey side, little overvalued. You're pricing in many, many years of perfect growth, exceeding expectations. Anything that could kind of derail that could be a problem. And I'm bringing this up because this could also be a problem for AMC at some point down the line, maybe in the not so distant future. Now, AMC stock following earnings was down about 13.5%. On Friday, you were up almost 1%, down a third of 1% in after hours. Overall, you're at $4.34 per share. And I think, again, it's one of those scenarios where AMC is not expensive. I guess it depends on what metric you're looking at. As long as AMC could pay off their debt, AMC could be a very inexpensive company right now. It's trading at all-time lows. Like, there's no fluff here, there's no hype here. It's bad. Okay, you are trading substantially lower than your, bankruptcy fear lows in 2021, which is just crazy to even think about. Like, how did we even get to this point, right? You're down, let's see, like 70% from 2021 when everyone thought AMC could go bankrupt. That's crazy. So there's no fluff here. There's no hype here. Let's be honest. And I think that puts you in an overall pretty good position for positive upside surprises. But again, there is that debt block, and AMC stock right now is essentially priced for, to some degree, bankruptcy as well. So I think you're just in a weird moment in time. If we get dilution, that could be the dagger in the coffin. AMC stock could be soon a $2 stock. I don't know if we get dilution, though. If we do, really, really bad. If we don't, then I think you kind of just tread water here. And, I just don't think there's anything until the markets move that is really going to get AMC stock to move. You could make an argument as we get closer to the first rate cut, which is currently priced in for June. That's when you could start to see more dollars coming into our markets, more money going into AMC. Okay, that could definitely give you some kind of move higher from here. But until that happens, I just don't see anything that's too exciting coming for AMC. Who knows? You can always just on a random day get a commitment from Adam Aron not to dilute shareholders. I thought that should have happened 2 earnings ago when AMC was $11 per share. AMC would be a $20+ stock right now. Adam Aron did not do that. He's pretty bad at his job as far as investor relations. We'll just call it that. That's obviously not his specific job, but that's a big part of his job, is to get the stock higher, to keep the stock higher, and dilute shareholders at higher prices, right? If AMC was a $20, $30 stock right now, Adam Aron could dilute shareholders, and it would fundamentally help the business. So who knows? I mean, I could rant about Adam Aron for a long time, probably an hour. But long story short, it's all about dilution with AMC right now. No dilution, fine. A commitment not to dilute shareholders, really good. Dilution, bad. That's it. That's the thing that's really going to move AMC until we start to get interest rate cuts and AMC can extend out debt and lower their interest rates. Okay. Now, you do have a short interest percentage of free float at 12.59%, $136.09 million worth of short positions. Currently, days to cover 1.87, 31.5 million shares that are currently sold short. Shares out on loan, 38.11 million. Cost to borrow, 1.06%. Utilization of 56.83%. And a short score of 65.71 out of 100. And cost to borrow max at about 1.24%. Doesn't look like there's a lot of demand to short AMC, but it seems like there's always a lot of shorting activity. So that's another one of those kind of weird things. Now, on Friday, you did have volume of 70.69% to the call side, 29.31% to the put side. For this upcoming week, you have open interest of 56.62% calls and 43.38% put. So there's definitely more, if you will, neutral activity around AMC stock for this upcoming week. If we take a look at the Stocko tracker data and go ahead and refresh this page, we do have about 1,500 calls currently in the money, almost 1,600 calls currently in the money, 35,000 calls out the money, 9,100 puts in the money, and about 19,000 puts that are out of the money for this upcoming Friday. So not the largest numbers, but the following week, the week of the ARM lockup period, the week of potentially more volatility in our markets, especially around your AI stocks, the week of March 15th, you do have over 4,000 calls currently in the money, 235,000 calls out the money. In the money puts at about 30,000, out the money puts at about 109,000. So definitely a lot more option activity for March 15th expiration. So there you have that. 10-year treasury yields, also something to watch. If they can go lower, then that is going to be good. They did go lower on Friday, down about 6.5 basis points. That's probably what helped contribute to the 1% rebound we've seen on Friday in AMC stock. 10-year treasuries currently at 4.18%. And again, coming on Wednesday and Thursday, when Fed Jerome Powell does give his testimony to the Senate, that could definitely move around 10-year treasuries, just depending on what he says. I'm not expecting drastic new information, but if we do, then, you know, if we get some, that could obviously move things for the treasuries and for our market. Specifically, interest rate sensitive stocks can be vulnerable there to positive or negative surprises. Now, you do have sentiment for AMC neutral at 50. Yesterday it was at 51, so that's not terrible considering today is Sunday. Message volume is lower. Yesterday it was 46. Today it's 40. Again, pretty typical for a Sunday. Participation ratio is high at 55. That means there's more people talking about AMC, and that's good, right? That's good to get more people talking about AMC, but I don't think anything really, again, happens until we get new information. It's going to be very hard for AMC to do much of anything until we get dilution, a commitment to not see dilution, some kind of news or correction event in our markets, a broadening out of our markets. You just need something to happen at this point to really get the stock moving. I think on a risk to reward basis, again, for AMC, it makes a lot of sense buying AMC here, if not just outright holding AMC, because I mean the time to sell was a long time ago. If you are now feeling like you're in that camp, I think there's a better time to sell coming. I think AMC stock will go higher. I wouldn't say the next move, I think, is higher, because it sounds like Adam Aron wants to dilute shareholders again. But I mean, when they start to run the numbers, they're going to realize that AMC stock's too low for dilution. I mean, you're going to fall to $2 stock. Like, that's just not a good scenario to be in, okay? You do have the percent of stocks above their 50-day moving average at 55.15%, and that has been trending higher ever since you hit the low of about 44%. Still overall, though, not a lot of stocks are above their 50-day moving average. This is not like terrible, but it's not good either. October, November, you were at about 15 to 20% of stocks above their 50-day moving average. As we started 2024, you were at 86% of stocks above their 50-day moving average. That's when you get into a kind of everything rally, where just the broad markets are doing well and broadening out. You're not there right now, but certain sectors of the markets are definitely starting to broaden out at least a little bit. So, ladies and gentlemen, let me know what you think about this information on a more technical basis. If we get above that 50-day moving average, that's going to be great. I expect a lot of resistance there. That is currently at $4.79 per share. If you get above that, great. If not, not so great. The RSI is at 45.11, which is under 50, so you're under neutral, but it's pretty much neutral. Anything between 45 and 55 tends to be pretty neutral in my personal opinion. But if you do fall from here, then you're going to get back into maybe even oversold territory. The MACD line could very well go positive this week if things just kind of trend sideways or even go higher from here. And that would be good. That could potentially bring more, traders into the stock. We'll see. I mean, I don't know what the thesis would be for a random bullish trade right now on AMC, unless you had information that, I don't, but we'll see. Maybe Powell this upcoming week does get bond yields falling, and maybe that could bring some more money into our markets. Who knows? We'll see. Let me know down below in the comment section what you think about this information down below in the comment section. Are you bullish? Are you bearish right now on AMC stock? Thank you for watching, ladies and gentlemen, and I will see you in the next one.